All right, let's dive into one of the most audacious and, frankly, wildest corporate strategies in modern finance. We're talking about Michael Saylor, a guy who took a perfectly successful software company and decided to turn it into a machine for buying Bitcoin. It's a story that has completely shaken up the rules of what a company's treasury is supposed to do. And it all starts with this one single idea, a really powerful metaphor. For Michael Saylor, holding your company's cash isn't the safe, prudent thing to do. No, he says it's like holding a melting ice cube. It's a guaranteed loss. Understanding this one belief is the absolute key to unlocking why a 30-year-old tech company bet its entire future on crypto. So let's really break down this melting ice cube problem. Saylor's entire argument is that the number one job of a corporate treasury, to just hold on to the company's value, is fundamentally broken in today's economy. And the culprit? What he calls fiat debasement, the slow, steady erosion of what your money can actually buy. Traditionally, running a company's treasury is a defensive game. It's all about playing it safe. You hold cash, you buy government bonds, maybe some other low-yield stuff. The goal is super simple. Whatever you do, don't lose the money. But this is where Saylor flips the entire script. He argues that this quote-unquote safe strategy is actually the riskiest move of all. He looks at bonds and sees the returns aren't even keeping up with inflation. He sees gold as this antiquated old-world asset. To him, these so-called safe havens are literally destroying shareholder value day in and day out. So, if the old ways are broken, what's the solution? And how on earth did he land on Bitcoin as the answer? Well, it wasn't just a random shot in the dark. It came from a simple three-part investment formula he's apparently been using for decades to spot these massive opportunities. And the formula itself is almost deceptively simple. First, you find something that solves a universal need that basically everyone has. Second, you make sure it's got some kind of structural advantage, like a network, that makes it almost impossible for anyone to shut down. And third, and this is the real kicker, you have to find it when almost everyone else misunderstands what it truly is. And look, this wasn't some new idea he cooked up just for Bitcoin. He used this exact same logic on the tech giants we know today way before they were, well, giants. He saw Facebook was tapping into our need for connection, that Amazon was building unstoppable digital plumbing, and that Apple was putting a supercomputer in everyone's pocket, all while the rest of the market was hung up on the short-term risks. And that brings us to the crucial point. For Saylor, Bitcoin isn't just another investment. It is the absolute, purest version of his whole thesis. He sees it as this perfect, sovereign-grade digital property that solves the universal problem of storing value. It's secured by a network that no government or company can control, and, critically, it's completely misunderstood by the big institutions who still think it's just some speculative digital token. So, armed with this level of conviction, Saylor didn't just go out and buy a little Bitcoin for the company. Oh no. He re-engineered the entire company, transforming MicroStrategy into this highly leveraged machine designed for one thing, and one thing only: stack as much Bitcoin as possible, as fast as possible. And he does this with a powerful and, pretty controversial financial engine that some people have called the crypto reactor. The fuel for this reactor is a concept called accretive dilution. Just think about it like this. He sells new shares of his company to raise cash. But because the market values his company at such a premium, every time he sells a share, the cash he gets can buy more Bitcoin than that share technically represents. So he's actually increasing the amount of Bitcoin per share for all the existing owners. It's a pretty wild financial maneuver. And to keep this reactor humming, the company has raised billions and billions of dollars. They sell new stock, sure, but they also issue these special convertible notes, which are basically like getting a 0% interest loan. They're borrowing massive amounts of capital for free to buy an asset they believe is going to go to the moon. It's a level of treasury activism you just don't see in the traditional corporate world. And, well, here's what that strategy looks like in practice. The results are just staggering. Since 2020, the company has gone from owning zero Bitcoin to being the single largest corporate holder on the entire planet. They control a huge chunk of the total supply. And if you were an investor who believed in this vision, the results have been nothing short of explosive. The stock's performance has just crushed traditional stores of value like gold. It's crushed the broader market. It's created an immense amount of wealth for anyone who shared Saylor's conviction. But, and this is a really big but, this is where the story gets really complicated. because for every single person who sees Saylor as a genius, a visionary, there's a skeptic screaming that this entire thing is a disaster waiting to happen, a house of cards built on nothing but hype and debt.
Okay, so now we have to look at the other side of the coin. Critics argue that this so-called crypto reactor is really just a fancy name for a Ponzi loop. You know, a cycle where the whole system only works as long as a constant stream of new money keeps pouring in at higher and higher prices.
And this right here is Exhibit A for the skeptics. There's this massive, glaring gap between what the company is worth on the stock market and the actual value of the Bitcoin it holds. For long periods, investors have been willing to pay a huge premium for the stock. So the billion-dollar question is, why?
Well, skeptics will tell you that premium is all the proof you need. They see a feedback loop that runs on hype. The company takes in new investor money at that inflated stock price, uses it to buy more Bitcoin, which helps prop up the per-share value, which then attracts more investors. And the whole cycle just keeps repeating. But, what happens if that new money ever dries up?
And this kind of high-stakes bet-the-farm strategy isn't exactly new for Saylor. You have to remember, back during the dot-com bust, his company got into hot water over its accounting. The stock completely collapsed, and he personally lost something like $6 billion in one day. For critics, that history adds a really important layer of context to his massive appetite for risk today.
And that skepticism has only been fueled by moments like this one. In the summer of 2025, the company basically promised shareholders they wouldn't sell more stock to buy Bitcoin, only to turn around just 2 weeks later and do exactly that, to the tune of another $735 million. So where does all this leave us? What is this company really? Is it a visionary pioneer? Is it a reckless house of cards? The truth is, it's probably morphed into something completely new, something we haven't quite seen before. And they've now made this new identity official. This is no longer a software company with a Bitcoin hobby. They formally rebranded, defining themselves as a Bitcoin Treasury company. That's a huge shift. It moves the Treasury Department from a quiet back-office function to the absolute heart of the entire business model. I mean, this chart really says it all, doesn't it? The company essentially is Bitcoin now. That old software business? It's still there, but its main job is to generate cash, to pay the bills, and serve as the corporate wrapper for the real mission, the relentless, nonstop acquisition of Bitcoin. And this really brings everything full circle, right back to the beginning. For Saylor, this isn't just about making money, it's a philosophy. He sees Bitcoin as digital energy, a perfect system that obeys the laws of physics. And in his mind, his company is just the most efficient machine ever built for channeling that energy, turning a sleepy old treasury into an active engine for creating value. And so, this is the ultimate question we're left with. Are we watching Michael Saylor build the blueprint for the 21st century corporation? A future where a company's treasury is no longer a passive vault, but an aggressive engine for growth? Or is he just pulling off one of the biggest, most leveraged gambles in financial history, one that's destined to become a cautionary tale for generations to come?